Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm joined by Zacks small cap analyst, Mark Zinski, to talk about what else the AI small cap stocks. We've been talking about them for the last year now here on the podcast. And I brought Mark back on this week so that we can revisit the stocks that we've chatted about over the last year. What is happening with these small caps? Now, they're all in AI. That has been a hot area, but in recent weeks, we've seen a pullback. Is that happening with these stocks? And how difficult is it to be an AI stock and a small cap during these times? Because the small caps are still lagging their large cap brothers. So welcome back, Mark.
Hi, Tracy. How are things?
Good. I'm glad you decided to come back on because I feel like here in September, this is a good time of the year to revisit what's going on with these AI stocks. Because as I mentioned, they have pulled back a little bit. Even the stellar earnings report from NVIDIA, it wasn't enough to soothe some of the doubts that the AI story might be not over, but slowing now. But we've seen these fears before and they're quite normal. And so I'm sure we'll work our way through those, but any kind of fears on a company like NVIDIA is certainly going to work its way through some of these small cap names that are either on the infrastructure side or they have their own products that they're deploying the AI in. So it's kind of an interesting combination that we're bringing this week on the podcast. And also, I want to remind everybody that I'm a stock strategist and Mark is the analyst. So it's a little bit different viewpoint on what's going on. I look at the bigger picture, and Mark actually studies these companies and to find hidden gems among the small caps. So where do you want to start? I'm going to show a chart. I'm going to show a chart of the 1 year chart of 5 of the stocks we've chatted about in the last year. We actually have covered 6, but 1 stock was acquired and has now gone away. So that one is no longer on the list. And that was ICAD, ICAD, for those who are curious or have watched the old episodes. But we now still have 5 other stocks that we've chatted about. And this is the 1 year. And you can see it's been quite a wild ride for all of these stocks. But 3 of them are big winners over the last year. And then 1 kind of flat to down slightly. And then 1 we do have Note, N-O-T-E, down 65%. And that's FiscalNote Holdings, which is the name up here at the top of the chart, because I started this chart off of their ticker. So Mark, let's talk about FiscalNote Holdings, because this is the underperformer. And like I said, down 65% over the last year. But, is there some deal there or what is going on?
Well, it is out of those names, it's the elephant in the room. So the question is kind of what happened, what went wrong? Is it a proverbial value trap, etc.? So you'll recall that we segmented our picks into either infrastructure, picks and shovels plays, or software plays. So FiscalNote is a software play in the, I'll say, the public policy sector. So their software enables enterprises to cut through all the red tape of regulations or pending regulations that are going to impact their company. And the thesis or the value add to a prospective company is that it should, in theory, cut down on some of your compliance costs and maybe even potentially some of your outside legal counsel costs, which we all know would be a great thing. I think there are several things that the market is concerned about with the name. So I'll kind of present the bear case and then the retort, the bull case. I
Okay.
think the number one fear is that the large language models, i.e., like a Chat GPT, are going to be very active competitors for them, and that companies may say to themselves, "Why should I, bother investing in your software when these other large language models out there can do it?" Um, Now, their counter argument, I think, would be that we have a unique funnel of data. We have unique proprietary data sets that we've been grooming for 10 years. And as we've seen, in what I've seen in personally using tools like ChatGPT, is if you can control the ecosystem, in other words, not let it not let the AI go out into the open net as much, you you should be able to significantly reduce the chances of hallucinations. So I think that their counter argument, is that we've tailor made, this product, and we've got a better data funnel, and our product will give you better, more precise and accurate results than just using a kind of a generic large language model. That being said, though, I do think that that's probably one of the primary concerns. I think another concern is, they've divested several pieces of their business. So year over year, the top line growth isn't there. And they've launched some new products, and they've publicly stated that they expect the second half now of 2025 to be better in terms of that top line growth. So I think the market is looking for better top line growth, and I think if they execute on that here in Q3 and Q4, that could be a real potential upside catalyst for the stock. I think also perhaps the market thinks, well, it seems like there's kind of some cost cutting going on with on the federal government side, and perhaps there was some fear that the federal government is in cost cutting mode and that they're not going to be as keen to invest in a new technology like this. It should be noted that about 17% of their revenue comes from the federal government, and a little over half is from private enterprises. So, in reality, the federal government isn't as big of a portion of their revenue mix. I actually thought when this whole Doge thing started, that FiscalNote's product would be an ideal match for Doge, and that they, maybe they would publicly announce some sort of relationship, but obviously it didn't happen. It seems intuitive to me that FiscalNote's software could be a productivity and efficiency enhancer for the federal government, but that remains to be seen. I think another factor is their debt load. Although they've substantially reduced it, about 60%, they've brought it down over 60% since the end of 2023. It still stands at about 110 million. So I think perhaps the market's still a little worried about their debt. They do have 34 million in cash. So I do think that the debt is contributing to a bit of an overhang. Now, they have restructured their debt recently, and so they've extended those maturities now out into 2029. So I think that should help assuage some of the market's fears about the debt load.
I
Getting
see
back
that
to that question. Oh, go ahead.
Yeah, we do have a Zacks rank on FiscalNote. So it is a number 3 hold right now.
It's a
We do
hold.
have 3 estimates on it for this year and next year.
Right. And I've actually been pinged by an investor or two about the name because it is popping up on screens now. If you run a screen based on current price and the price target, right? They just did a reverse split, by the way. And today was the first day they're trading off the split. So
Oh, okay.
some of the
Interesting.
numbers
So
might be
today is
confusing.
September 2nd for
Right.
those.
So some of the numbers, might be confusing. So the
Yeah, I
stock
see
right
it's
now,
up 1,154% right now.
yeah,
I was like, how is that
yeah,
happening?
those Zacks guys are geniuses. But so right now the stock's trading at about $5. So it was a uh, a 1 for 12 split. So
Okay.
just think in terms of that divisor 12.
Yeah.
Um, so it's now trading at about $5, and the consensus price target is at $31. So
Wow.
I think
Wow.
some investors that run screens based on the dispersion between the current stock price and the price targets, right?
Yeah.
Maximum upside are now intrigued by it because perhaps they think that the bottom is kind of set in, um, and why not take a flyer on it with that much potential upside? And it
Yeah.
is obviously in a hot space. It's in the AI space, and they have publicly said that they are open to selling the business. So they are, I think, actively, considering, selling the business. So
Okay.
the bull case, I think, I think there are several strong cases to be made for the bull side. I think, first of all, they've divested five non-core assets um, over 4 transactions, and all of those divestitures have been at very nice multiples. Um, so it kind of begs the question: well, if these non-core parts of the business are selling off at a nice premium, shouldn't the real AI meat and potatoes part of the business also sell off at a nice premium? So I think that that's certainly something to consider. Um, Also, they continue to have nice adjusted EBITDA margin improvement. So while the top line growth um, might not be as robust as people had hoped, they are executing on leverage and finding efficiencies and productivity enhancements within the business. And in that vein, you know, their gross margin is 79%. So, I mean, this is a 79% gross margin business.
Wow.
Um, and usually, those, have a lot of inherent value and usually sell
Yeah.
at nice premiums when they're taken out. Um, I mean, given your legal training, I do buy the argument that it certainly must be appealing to companies to be able to potentially reduce their outside counsel expense through a product like this. Because as we know,
Right.
legal expenses and compliance costs can be quite high.
Yeah.
So I think the value add from that proposition is quite compelling. Um, we also have, I think, a much more volatile geopolitical, state right now, and we obviously have a lot of um, things going on legislatively that companies have to keep tabs on. So I do think that this product should rhyme with um, the demand that's in the marketplace.
Yeah.
Um,
Okay.
and also note that 92% of the revenue is recurring. So you've got
Right.
some downside protection there.
Subscription. Yeah.
And they have brought in a new CEO um, within the last year or so. That's really more of a financial operator. Uh, the previous CEO was the founder, and it was did a great job establishing the product and all that. But now they brought
Right.
in an
Right.
actual operator to um, fine tune the business model.
Yeah.
And so far, I would argue that he's executing, pretty well in terms of the divestitures and getting the adjusted EBITDA uh, margin up. And the last piece of the puzzle is to rejuvenate top line growth.
Yeah.
So, um,
Yeah. The Zacks consensus for this year on earnings is a loss of 22 cents. They did make 7 cents a year ago, but that's a
Mhm.
decline of 414%. And then next year, a little bit improvement, but still a loss of 19 cents currently.
Yeah, I think we probably want to look at some adjusted EPS numbers, because I think those probably, that prior year probably has a gain from some of the divestitures.
Okay.
So you kind of need to comb through the data a little bit to get apples to
Yeah.
apples. But regardless, they're not going to need to go to the markets to raise cash or anything.
Okay.
And if you buy the argument that we could be in a, or we're close to a period of declining interest rates, then I think the debt issue becomes less of an issue as well.
Right.
Um,
Right.
so um, regardless,
Okay.
for an AI play with 79% gross margin, it's trading at like 1.6 times trailing sales and 10 times trailing EBITDA. So in my view,
Okay.
that looks compelling. So,
Yeah.
uh, but
Should we
hopefully they
switch
execute.
over
Yeah,
to another kind of software-y type play that we talked about, which is Autoscope Technologies, ticker AATC. They have a 40 million market cap, but this is the one that has paid that dividend. We don't
correct.
have a rank on it, but it's rare to see a dividend for a non-bank at this size market cap. So what's
Correct.
going on with Autoscope right now?
Well, their yield is still, I believe, if you could bring up the chart, I think it's still at um, about 8% ish.
Yeah, it is
And
8.2.
yeah, and I would argue that that is sustainable, at least for the next few quarters, for sure. I think that there have been some push outs in some of their projects, because they are dealing with municipalities, so they are prone to the fiscal spend cycles, and so I think um, top line growth, which had been pretty consistently strong, kind of wavered a bit in the last quarter or two due to those delays. But the stock is held in there, and I think that dividend yield is definitely helping to give it a bit of a floor. So I have given them a pass on the top line due to those delays, because I don't see, um, based on channel checks, any underlying weakness in the market or the demand side story there. So until I see that, I'll continue to give them the benefit of the doubt on the timing issue for top line.
Okay. And can you just remind people again what it is that they're doing for municipalities?
Correct. They're doing mostly what I would categorize as like intelligent uh, traffic system monitoring. So monitoring traffic flows, um, detecting when people are, going up an exit ramp, um, things like that. So
Right.
it makes a lot of intuitive sense that with the progress in camera and sensor technology, that you should be able to integrate this with AI to enhance public safety in a cost-effective way.
Yeah. I'm putting up the 1 month chart of some of these stocks that we're talking about, and you can see AATC up here at the top. It is the best performer in the last month, down
Mm-hmm.
4%, but it's just kind of hanging out there in this narrow trading range.
Right.
Even if you
Yeah, I
go
don't think
back,
it's. Mm-hmm.
even if you're going back like year to date, there it is. It's down 7 still, but you can just see this line going across. It's not really, nobody's buying it. Nobody's really selling it all that much
Right.
either. It's just kind of hanging out.
Yeah, I think they're clipping the coupon, and
Yeah.
you know, and that's good enough, for a lot of people. So
Okay.
the danger would be obviously if they put up some negative profitability quarters and cash looks constrained, and the dividend, you know, um, could be at
Right.
risk of being cut.
Right.
But I'm not
Okay.
seeing that in the near term.
Okay. Okay. That's good to know because I have a feeling most of the people are in it for that juicy dividend yield. So you always got to keep an eye on that. Okay. Let's talk about Innodata, ticker
Mm.
INOD. We have a rank on them. We did not have one on Autoscope. So, but we do have one on Innodata. They're number 3, 1.2 billion market cap. So a bit bigger than Autoscope there.
Hmm.
And the chart is kind of interesting on the surprise side, even on the earnings side. What's going on at Innodata now that we should know?
Well, obviously, data uh, had a nice run. Like a lot of the AI stocks, and I think it's taking a bit of a breather, like you had alluded to before, due to some concerns about AI spending, perhaps starting to slow down a bit. This is a picks and shovels play. If you'll recall, they do the annotating and the classifying of the unstructured data and the training and the AI training of the data for primarily at this point five out of the Magnificent Seven.
Okay.
And we know that the Magnificent Seven continues to spend their capex
Yeah.
forecasts on AI. It continued to be robust, and as far as I can tell, that AI spending race, arms race, is continuing. Now, the last quarter, they obviously had great top line growth, and perhaps investors are now starting to demand more on the leverage side. So, whereas before um, they were looking through it more of the prism of a sales multiple, just because the sales growth was so robust, I
Yeah.
think now it, maybe cooler heads have prevailed, and investors are wanting to see some evidence of leverage. So I think that that's probably what's going on with these guys. Um, so I think that the pullback um, here could be a good entry point because of
Okay.
that.
I'm putting up the 1 month chart again,
Hmm.
and you can see Innodata in the green line, and it's down 15 and a half over the last month.
Hmm.
And, it's up 133% in the last year. So this does seem to be a decent pullback here, not quite a bear, but
Right.
pretty decent sized pullback, like we're seeing with all the AI stocks.
Correct. Yeah, I think that
Yeah.
the AI stocks are all generally taking a breather. Um, so I guess you got to ask yourself, do you? And and I do fall in, I guess, to the camp where I think that this AI capex spend is going to continue at least for the next year or two. I just don't see it abating because of this arms race. We can debate whether
Yeah.
it's irrational or not, but I don't see it really um, slowing down. Now, um, and this is just a necessary uh, picks and shovels play. It just this data categorization of this unstructured data just needs to happen. Now, an interesting sidebar here um, to this story is that one of their competitors, Scale AI, was purchased by Meta several months ago,
Okay.
and there's speculation that one of the reasons Meta wanted to acquire them is because Scale AI was working with all of the major large language models, and so they arguably have some pretty good knowledge about what these models, what the strategy of these models is. And so by Meta acquiring them, they're getting a little, one could argue, a little bit of a leapfrog start on AI, because right, they're going to have knowledge of what the other competitors are doing, in
Yeah.
a general sense, right? And so that was part of, I think, of the underlying strategy of that acquisition for Meta. And after the deal was announced, because of that fact, um, some of Scale AI's customers said, "Whoa, whoa, whoa! We don't want Meta learning
Right.
anything about our
Controlling
models."
it. Yeah.
And so they immediately ceased their relationships with Scale AI. So
Right.
now, where are those customers going to go? They could potentially go to Innodata, and I think it's possible Innodata may make some announcement, some kind of significant step up, right? Announcement that, oh, we've just landed such and such big time, big name company as a
Yeah.
as a customer that's transitioned over from Scale AI.
Yeah.
So I think that that's a very interesting subplot, because you could have, I'm not saying it's going to happen, but I'm saying there's the chance that you could have a very significant step up function in revenue, because these deals are typically quite large once
Right.
and there's a land and expand kind of thing going on here too. So it might just be a small deal to begin with. They like the work Innodata does, and then it could instantly ramp up significantly. So something to
Yeah.
keep an eye on.
Yeah. The revenue was up 79% year over year in the second quarter, and that was reported at the end of July. So we're a couple weeks removed from their earnings report now. But the revenue was 58.4 million. They have cash and cash equivalents as of June 30th of 59.8 million.
Yeah.
And that was up from 46.9 at the end of December. So
Yeah.
they're growing that cash pretty significantly.
Yeah.
And then they did talk about in the report that the revenue growth included a significant new deal wins across a diversity of new and existing customers.
Mm-hmm.
But they aren't saying, I guess they didn't say who those customers were in
Right.
that
Right.
quarter.
They do.
So,
Yeah, they do have a very, significant customer concentration.
okay.
And I think
This is
additional
what has
upside.
everybody nervous, right? People
Yeah.
have it nervous about um, NVIDIA having it with just a couple of these, but it works its way down through the whole entire infrastructure system. They're only, we know who is spending the most money. Those are going to be the main customers.
I'd
How it
argue
is.
it gives, it gives you good visibility, because when those
For
customers
sure.
announce what their CapEx spend is going to be for 2026, and they say we're going to increase it by 25%. I'm
Yeah.
not saying it's a one-to-one correlation, but you can say, well, that should help data. I mean, we kind of know,
Yeah.
what what revenue could be like. So
Yeah.
um, again, the leverage, that number you quoted on the top line growth, the leverage, um, I think the EBITDA growth was like about half of that, right? So
Yeah.
investors might say, okay, they're growing top line, that's great, but they're not getting as much leverage. But I think that that's still, they're still in a hyper growth,
Right.
phase. Um,
Yeah.
One last thing to note about them too is, um, will they be able to execute in landing different types of customers outside of that core group of customers?
Right.
And will enterprises, um, at this point, enterprises are thinking, should I buy an off the shelf AI software product, or should we develop our own AI models internally?
Yeah.
And if you decide to develop your own AI models internally, then you need to, test your AI models, in which case then you would need the services of Innodata. So
Right.
that could be another upside catalyst if large enterprises decide to go it on their own. And it makes some sense in some cases that you want to have your own proprietary um,
Yeah.
AI models versus buying off the shelf. So
Right.
I certainly think there will be demand there.
Yeah. Okay. So that's Innodata, INOD, down 15% in the last month. So, but it's still trading at like 53 times earnings, just for those wondering. But we're looking for growth here, not values, really. Okay, let's stay kind of in this area and go over to TSS Inc. We've talked about them. TSSI is the ticker. And this is the one that had its big customer of Dell, right? It
Yes.
was helping Dell. So what's going on with them now? Let's see on the chart. So over the last month, these shares are down 54.3%. So this is at a real big pullback. Is that because of something Dell said, or just is this also industry jitters about a slowdown in spending?
Well, I think when they put up their quarter, they had again significant top line growth. But again, the same story here applies where the leverage was lacking. And I
Okay.
think in general, the AI story out there is being scrutinized more
Yeah.
um, because it's like, oh, this is great. Okay, maybe this is a once in a generation thing. That's great. The top line, I get it. Top line's robust, but nobody seems to be really leveraging it and making a ton of money off of it. And,
Right.
um, in questions about, is this a bubble? Where's the ROI on it? We can debate, uh, the ROI on it. Um, but I think that's kind of what's going on with them here. And secondly, I mean, the stock, had a great run. I mean, it was perhaps, time for a breather as well. And the market was looking for a reason to pull back. But
Yeah.
then they also announced a secondary.
Okay.
Um, so they did a secondary at $17, 3 million shares. So they raised about 50, almost 60 million. And I think perhaps the market thought, well, geez, why didn't you try to do a secondary when the stock was, in the mid 20s?
Right. Right.
And so they did the secondary kind of after the pullback.
Yeah.
Um, but here's kind of the math. So recall they built out a new data center. So these guys, are doing high density AI rack integration. So they build the data center and then they provide the data center services. So one could argue it's more of a type of commodity business, right? In that the revenue is procurement and systems integration. They're not manufacturing any kind of a proprietary product. Okay, they're a little bit of an assembler. It's fair to say.
Yeah.
But that being said, um, they do have a decent moat in that this data center is in Texas, which we know is pretty, pro tech, friendly, and
Hmm.
isn't as strict with the power requirements and so forth. And they are able to generate power capacity of 15 megawatts versus 2.7 megawatts previously. So this new facility has got some great, power scale to it. And that facility costs them about 32 million. So with this raise, as I said, they raised about 60 million. Cash on hand before that was about 30, almost 37 million. So they have over 100 million in dry powder now. So will they announce the building of another 2 or 3, data centers?
Right.
That's the key question.
Yeah.
Or will they have about 20 million in debt, um, which is flowing through to a higher interest expense through the P&L. Well, they decide to pay down some of that debt so they can juice up EPS a bit, but then maybe just build, 2 data centers instead of 3. I don't know. But the
Yeah.
point being, they clearly must think that there's a lot of demand out there to raise this amount of dry powder. And we know that after 2 years, the data center, the payback is complete. So the ROI is there. So
Yeah.
that's another reason, I think why they felt comfortable with this dry powder. So if they could announce a customer outside of Dell, another 2
Right.
customers outside of Dell to diversify the revenue base, I think that would help the stock, arguably pretty
Yeah.
immensely.
The
Um,
stock is trading, pretty low right now. If they took that secondary at around 17, it's trading at 12.84 on
mhm.
September 2nd. So just
And
so
so with
people
this
know.
pullback, the stock's trading at like about 1.5 times trailing sales.
Okay. Wow, that's
And you're
cheap.
getting, again, some people might argue it's low margin sales growth, but regardless, it's very significant top line growth. And,
Yeah.
I guess the bet is whether they can get some more leverage out of that.
Right. Right.
But the point being, at least you got to feel comfortable on the demand side of the equation that they're
Right.
going to,
Well, all the
so
babies being thrown out with the bathwater right now.
right. And
When you get these
generally,
jitters, we've seen this before when we
yeah,
get these jitters. And then you're going to have to wait until at least the next earnings report and that next earnings cycle in a couple of months to see, what's happening then. And you're going to have to wait and see for the Mag Sevens and what they say about their
right,
spending.
right,
And then it'll either be good or they're cutting it, or but everybody's waiting for the cutting side of it. And if that doesn't happen, then I do think we're going to see another rally in all of these stocks because they're going to
right.
get significantly cheaper, most likely.
Well, and in general, when you have a secondary, in general, the that secondary price uh, can kind of serve as a floor for the stock,
Okay.
right? Generally speaking.
Yeah.
Um, Now, in terms of the ROI, though, I would mention that Google, I think it's fair to say Google is getting good ROI on their spend because when we do search, we can see AI incorporated into the search,
Yeah.
and remember their I think their ad revenue the previous quarter had stagnated for the first time in I don't know how many years, but
Right.
this last quarter it found new life again.
Right.
So clearly, I think they're getting a good return on that AI investment. So that would be an example where I think there is a positive return from the AI investment. So it's
Yeah.
not completely wasted money. Um,
Yeah.
I guess how it's applied matters, but um, there are people that are capitalizing on it.
Yeah. Okay, let's switch over to our final stock then, which is Duos Technologies Group, ticker DUOT. This was the one I feel is most interesting. It's up 181% over the last year. I put up that chart again of all the stocks. It's this one in red if you're watching the video. But it too has weakened a bit. But this is the one that is making this transformation, I feel, of the business over to turbines and powering the data centers. They call them edge data center solutions. And they had, for the first 6 months of the year, the highest revenue in company history, 10.7 million. They've delivered, I guess, 10 units so far of these turbines, and they're expecting 15 of them this year and 50 for next year. They have 40.7 million in their backlog as of the end of the second quarter. And so I kind of like this whole energy side and even the turbines, which is an interesting play. What are you thinking about what is going on with Duos Technology Group here?
Well, you'll recall that their primary business um, was an AI imaging software product,
Right.
which we liked, and it makes a
Yeah.
lot of sense. So um, that technology is able to scan the undercarriage of the rail cars, and akin to the iCAD, the stock that got bought out at a nice multiple that we talked about, and that stock was also involved in imaging, digital mammography. The algorithms there can really be applied in some interesting ways in terms of detecting abnormalities. And
Yeah.
so, but the problem was they just couldn't quite get any consistent sales momentum with the railroads. And of course, the railroads can be a little cyclical in their capex spending.
Yeah.
So the stock was kind of frustrating. So when we talked about it last time, we were kind of at a neutral, about it because we
Yeah.
wanted to see some more evidence of execution. And so I think this new business line that you mentioned with the turbines is very interesting, and so that hopefully can diversify away from that more cyclical, unpredictable, lumpy railroad product business. And
Yeah.
so um, I think if they can demonstrate continued execution on that, the turbine business, then the stock certainly looks very interesting.
Yeah, they've only, I think, started really on the rollout of that
Hmm.
turbine side as of June 1st, I believe. So it wasn't even most of the first half of the year was on that side. But it does say Duos Energy oversees the deployment and operations of a fleet of mobile gas turbines and related balance of plant inventory, providing management, sales, and operational support services.
Hmm.
So, um, yeah. So I kind of like this combination, even if it's slowed a bit on the railroad side
Yeah,
and the undercarriage side. But if they can really get this turbine side going, like they're claiming that they are, then it could be kind of an interesting mix, I feel. And
yeah.
I feel like perhaps the um, margins might be higher on that turbine side given the demand right now, but I'm not sure if that's true or not.
Well, as we've talked about before, and even in the office, right? One of the things that one of the more real practical things that could derail this whole AI thing are the power requirements,
Yeah,
and especially depending on um, where you're operating and the regulations in that locality where you're operating it can play a big role as to how much you're able to expand and how much power you're able to consume. And so that's still, I think, a work in progress. The regulators kind of still don't know. Obviously, it's going to stress out the grid. Um, it is stressing out the grid in some places, and
yeah,
so
for sure.
um, it's a canary in the coal mine. And so these guys, I think are in the mix for helping to solve that problem. So, um, and I think it's not very. It is kind of again another picks and shovels derivative play um,
Yeah,
off of AI that's very interesting that doesn't get talked about too much. So, I think
right.
investors can by looking at this and doing some diligence can be, I think, early to the story here.
Yeah, we do have a Zacks rank on Duos Technology Group. It's a number 3 right now. Um, so that's good. It looks like we have two estimates. They're expected to lose 52 cents
Mm.
this year. but that's down from $1.39 last year. So it's quite an improvement there. And then we have just 3 cent gain in 26, but again, quite a significant improvement on the earnings side. On the revenue side, we have revenue expected to be up 286% this year, and then 43% next year as they really get that turbine side of the business ramping
Right.
up.
I think one of our main concerns last time in talking about it was the cash burn and the propensity
Yes.
for them having to do a raise. And
Yeah.
so we
Did
were
they
kind
do
of on
one?
the sidelines, waiting for that to happen, and then maybe that would be an attractive
Yeah.
entry point. So something to be mindful of.
But they didn't do one?
As far as I know, no, they have not.
Okay.
Don't
So
quote
they're
me
one
on
of the ones that has not yet. Yeah. I mean, it's not really surprising with some of these companies that just have, a $40 million market cap, and then they're trying to roll out gas turbines, that aren't cheap. Like it costs money to do all this stuff. So yeah, this is an interesting one. I like these ones that are companies that are looking for new ways to expand on the AI. They made a decision about a year ago that their current business was not going to be enough, and they're
it. Mhm.
looking for other new ways to get into the space and to go into the energy side. It was an interesting call, I feel, for a company like this.
Yeah, this is a company's a great example of great technology. When I'm talking about the undercarriage inspection software,
Yeah,
great technology solving a real problem, um, a process that's normally very manually intensive in terms of you know inspection, and of course the human eye, as we know, is pretty fallible. So to have these cameras is a huge step up and a huge advantage. But you can have great technology, but you still have to be able to monetize it.
right.
And this would be a case where they've struggled to do that, and in the process have been burning, a lot of cash. So just they
Yeah,
can't quite seem to get the business formula down. But with with the turbine business, this that could be the catalyst that gets them there and gets them in a better
yeah.
rhythm, operating rhythm.
Yeah. Okay. So I just put up the 3 year chart, or not 3 year, 3 month chart. Sorry. And you can see it has weakened. All of these stocks have weakened over the
Mm.
3 month period as well. DUOT is down 16 there. Not quite as bad in the last month for them, just down 5.5 there. But this is a buying opportunity, as we've been saying, in all of these names, or at least to put them on your watch list and start paying attention for if there's even a bigger sell off, then you might be able to get some real deals on some of these if you're interested in the small cap AI side. It's not for the faint of heart, as we can
Mm.
see with these charts. You you have to really, as you mentioned earlier, you have to have patience with some of these. You have to stay on top of them because they don't have as much analyst coverage. And you really have to watch what's going on, basically, with
Well,
all
yeah,
of
and
these.
again, these are not pre-revenue companies. I mean, these companies have revenue
Yeah,
and
for
fairly
sure.
substantial revenue growth. It's just, I
Yeah,
think, on
yeah,
the leverage side, um, investors are getting a little fatigued, waiting for
yeah,
that leverage, which
right.
is understandable. But
Yeah,
you know, I think
yeah,
that's the mindset. So
yeah,
that usually creates an opportunities and perhaps some overselling. So
yeah, for sure. Now, do you think if we get a bigger rally in the small caps at all, obviously, usually that small cap rally lifts all boats. Will we
hmm.
see the AI stocks also being lifted if we see a bigger rally in the small caps?
Well, um, I think I shared that one snippet of data. Was it Bank? I think Bank of America did a study on on the small caps. And if we have a prolonged interest rate lowering period, the small cap class, their interest expense will go down materially. Interest expense as a percentage of net income. And so it's fair to say that historically, yes, as an asset class, small caps have been very correlated to interest rates.
Yeah.
But there have been a few head fakes on interest rates.
Yeah.
I've had a few investors kind of have reached out to me, and they seem a little more interested in
Okay.
small caps, I think, because of that prospect of prolonged interest rate lowering. So,
Yeah.
but we've been faked out before, as
We
you know.
have. We
um,
definitely have.
yeah. So,
Okay. Something to keep an eye on.
yeah.
Okay. Let me recap the stocks we talked about today. So there was FiscalNote Holdings. It is the worst performing out of these 5 that we've covered over the last year. Ticker NOTE. Then we talked about Autoscope Technologies, ticker AATC. That's the one with the dividend that's yielding 8.2% right now. Innodata, INOD is the ticker on that one. TSS Inc. is the one that has Dell as its main customer on the data center build out side. TSSI is that ticker. And then Duos Technologies is the one we were just talking about with the turbines. D as in David, U, O, T. And as always, I expect to have Mark on again with some, maybe hopefully some new names. There's always got to be some new companies out there in this game that he's discovering. So we'll have him back on with some more AI names as the year goes on here, because there's a lot going on. So you want to be sure to subscribe. Get us on YouTube. Just go to youtube.com or Zacks.com/YouTube. Sorry. You can get us that way. You can also go to YouTube and just put in Zacks Investment Research to get our channel, and you'll get all of our great videos on stock picks there, including the top stock picks of the week. You don't want to miss that one. And you can get us on all the audio podcast channels on Apple, Spotify, Amazon Music. We're on SoundCloud. Just about anywhere you can get podcasts, you will find us. But be sure to get us somewhere, and I'll see you again next week with some more stocks.